Is it safe to say that those in ASEAN that have a strong domestic growth story and growth drivers, they are best placed to withstand any tariff and trade-related spillover?
Yeah, I think that is correct. We've just sort of baked in some of the trade tensions into our base case forecasts for 2019. And the countries that seem to be doing best under the scenario of rising trade tensions are Indonesia, the Philippines, and to an extent Vietnam, where they have sort of strong domestic growth stories and also are relatively closed economies. Trade is less important to those economies than it is for, say, Malaysia, Thailand, and Singapore.
And let's talk about Singapore. There were some early warning signs cropping up in the export numbers not too long ago, in the GDP data as well. Are they going to continue to lose momentum in the second half of this year?
Yeah, our base case for Singapore is that it is one of the more sort of affected economies by rising trade tensions. Manufacturing did slow at the latest GDP print. Trade numbers have been coming in softer. It's unsure at this stage whether that data is sort of specifically affected by rising trade tensions or whether something else is going on in Singapore's economy. You would expect the sort of bulk of the trade concerns to come through sort of in Q4. But on that sort of scenario, we would expect Singapore's growth to be slowing in the second half of the year.
You make a very interesting point in the report that US tariffs mean that China is going to accelerate the policy of supply chain diversification through the China Plus One policy. So who stands to benefit the most from that?
Sure. So our sort of logic here is that if Chinese companies are sort of facing these tariffs for their exports to the US, then they might try to realign production to sort of other manufacturing bases within Asia, like the China Plus One model that you mentioned. The countries that look to do very well here are countries where you're already seeing those sort of FDI flows from China into those countries. In particular, Vietnam looks well placed. FDI into Vietnam has been very strong in 2017 and 2018 to date. Also Malaysia. We did a survey of Chinese corporates in January and sort of asked them where they were looking to invest within Asia. And a lot of Chinese corporates highlighted Southeast Asia, and Malaysia was sort of the most favoured.
That is really interesting because after the election, surely Malaysia's relationship with China is that much more complex under a Mahathir government. They are reviewing, putting mega projects on hold. Doesn't it make Malaysia somewhat vulnerable?
It does. The election has changed the dynamic between Malaysia and China slightly. In particular, sort of all of the large projects that China has been doing have sort of come under risk. What I would say is that sort of Chinese FDI flows into Malaysia have quite a long history. China's been investing there for an extremely long period of time. And actually, a lot of the investments that they make are sort of smaller investments that are less flashy, grab fewer headlines, and therefore are less likely to come under pressure under a new regime. If you look at what Malaysians sort of think of China, Pew Research did a report of sort of attitudes to China within Asia, and Malaysia actually has the most positive net favourability rating for China. It was sort of plus 80%. So that probably hasn't changed dramatically after the election. So Malaysia will probably still be a favoured hub for Chinese companies looking to expand overseas.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.